Welcome back. Well, as promised, let's get straight to our next chat. We have L.G.Balakrishnan and brothers. The company reported a pretty subdued set of numbers actually in the past quarter. But what's the way ahead? To help us out, as always, we have Mr. Vijayakumar, the CMD of L.G.Balakrishnan. Hi, sir. Good morning, and always good to speak to you, sir. You've achieved a revenue growth of close to around 10% in the past year. For this year, what kind of a revenue growth could we look at? And also margins, well, they have been at around that 16% or thereabouts. So clear out both these two basic numbers first, revenue growth and margins.
Thank you for having me on your show. Good morning to all the viewers. And we've done exactly what we foresaw that we would do. For the future, we expect that we will continue the growth rate of 10%. And with the current scenario in the world, we expect that we will have an opportunity to grow up to maybe even 14%.
Okay. And margins, sir? Margins has been a little bit lower. I think you were targeting 17%. I think it's a little lower than that. Should this be the broad band?
Margin dropped 1% because of the American situation. Maybe going forward for one quarter, I foresee that there will be a further drop in margins, maybe another 1%. But it should pick up again in the second and third quarters.
All right, so margins should pick up again in the second and third quarter. I remember you telling us that, exports, which are 13% of your sales, continue to be a bit of a worry point for you. So, I mean, just trying to understand what is the kind of steps that you are taking to improve upon that. And a couple of triggers for you would be ramp up of LGB Steels and the industrial chains business. How much do they contribute to your business right now? And what's your target contribution from these businesses over the next couple of years, sir?
We've done about 30 crores in industrial chain. And we hope to do about 150 crores going forward. In steel, we've done 80 crores this year, the last quarter. We hope to do about 200 crores next year.
All right, so steel from 80 goes to 200 and chains goes from 30 to 150. What about exports? Where do they go next year?
Export, I would think that we will stay stagnant at what we are doing. I hope there won't be a drop. The American tariff has to also stabilize, because when America catches a cold, when coughs, we all catch a cold.
But this time around, sir, from a market perspective, actually we had a cold first. So when America caught the cold, actually we were getting better, at least from a stock market perspective. But normally, I think in a global scenario, I think that's the way it plays out. Let's focus on a couple of more aspects. EV, that's a segment that you've been looking at. What kind of a revenue contribution can we look at in FY26, FY27 as well?
I can't foresee any, I can't say anything about EV growth because whatever we expect, it has not happened.
Okay.
And the growth in EV has been very big.
Yes.
The IC growth has been far more than what we projected. So I would not forecast anything for the EV growth. But
okay.
we are ready with products for EV, like the gearbox and specialized chains. We are also concentrating on belts.
Yes.
So if it happens, we are there.
But as of now, there is no visibility.
There is not great visibility. The turnover is very small.
And this 10 to 14% revenue growth guidance that you're giving us, this includes both the segments, industrial chains, as well as the LGB steels?
Yes, all put together.
All put together. Got it. One more question with regard to replacement revenues. As a percentage of your total revenue mix, what is it?
It's about 32%.
Okay. There was a trigger that a higher replacement revenue would actually be better for you. So where would you like to take this number?
I think that will be flat. I don't expect any additional growth in percentages.
So aftermarket share remains between 30 to 32%. And what about the new facility? I mean, you did speak about the RGB steels. You spoke about the industrial chains business as well. What about any other new capex that you are planning?
We've spent about 50 crores on acquisition of property in Bawal, Haryana. And we will be moving one of the plants in Haryana, that is Manesar, to this facility. This facility will be about 200,000 square feet, and Manesar at this moment of time is about 50,000 square feet. So this will be moved to the bigger facility because we expect better demand. We need to put in more machines, and that will be a separate project by itself.
Got it. All right. Mr. Vijayakumar, when we have spoken in the past, you had told us that the promoter holding, you look at upping that. It's been steady for the last few quarters in that ballpark 34-35%. In the coming year, should we expect the promoter holding to move gradually towards that 40% odd mark? If yes, how do you do it? Will you do a preference or will you buy from the open market?
I don't think we'll do another preference right now, though the window for preference is open. We have to study and then we would like to look at the market conditions and then decide.
What about the transmission and metal forming mix? Where do you expect that mix to be going forward? I remember that being around 80 to 20%.
That's going to remain the same. It's going to be flat.
All right. And what proportion of your business growth, how will that, correlate with the growth in the automobile industry itself, in the two-wheeler industry, the motorcycle industry, so to say?
Yeah, we will match the same growth.
You will match the same growth, no further or no lower than that?
No.
All right. Thank you so much for joining in and giving us all those details for the next year. Margins around the similar vicinity, maybe some improvement towards the second half of this year, with a 10 to 14% sort of revenue growth coming in, 30 to 32% in the aftermarket sales, and more importantly, growth coming in from their chain business as well as their steel business is what L.G.Balakrishnan is talking about next year.